All right, let's get right into it. We're going to break down the absolutely wild story of how one company, MicroStrategy, and its CEO, Michael Saylor, made what might be one of the boldest financial decisions of this century. They completely transformed their company by going all in on Bitcoin. It all started with a huge problem, and it boils down to this one simple question. Just imagine for a second you're running a company and you've got $500 million sitting in the bank. That should be a good thing, right? A sign of security. Well, for Michael Saylor, it was actually his biggest weakness. And what he decided to do about it wasn't just some small portfolio adjustment. No, this was a massive, fundamental shift that sent shockwaves through the entire financial world. So let's dig into how this whole thing played out. Okay, so first, we have to understand the core of the problem. Saylor had this amazing way of describing it. He said his company's cash was like a giant melting ice cube. And the thing causing it to melt? A really aggressive and kind of scary new economic environment. So after the big economic shakeup in 2020, Saylor saw what economists call a K-shaped recovery. This slide shows it perfectly. You see the top arm of the K? That's Wall Street, people who own assets. Their wealth was just shooting upwards. But then you look at the bottom arm of the K, that's Main Street, regular people, small businesses, and they were trending down, struggling just to keep their heads above water. And this is the metaphor Saylor used that just hit so hard. The company was working, they were making money, but this powerful headwind of inflation was pushing them backward faster than they could paddle forward. They were literally losing the race. To make this super real, check out this example. The price of pork in Thailand jumped by almost 70%. For a regular family, that means your money just doesn't go as far. Now just imagine that same effect, but on $500 million. The loss in buying power was happening on a colossal scale. And here's the number that puts it all in perspective. That $500 million cash pile, it was effectively losing $100 million in value every single year. Just poof, gone. So the big takeaway here is that doing nothing, that was the riskiest move they could make. So what do? Saylor and his team started this urgent search. They needed to find a safe place to park their money, a port in the storm. They needed an asset, any asset that could beat what they saw as a 20% annual inflation headwind. And they looked at all the usual stuff. They looked at gold, but its growth just seemed kind of weak. They thought about real estate and tech stocks, but those already seemed way overvalued. Government bonds, the returns were practically zero. None of the old safe havens were going to cut it. It became super clear that the old playbook was useless. You can't solve a brand new 21st century digital problem with old world solutions. And that's when their search finally led them to Bitcoin. And that brings us to the big solution. But here's what's so important to get. This wasn't just some reckless bet at a casino. No, it was a very methodical, very calculated plan to turn that melting ice cube into something solid and lasting. Here's exactly how they did it in 3 smart steps. First, they put an initial $250 million into Bitcoin. Then, and this was a really clever move, they went to their shareholders and said, hey, if you're not on board with this new plan, we'll buy your stock back. Finally, they took the cash they had left and bought another $175 million in Bitcoin. And the result? Oh man, it was faster and bigger than pretty much anyone could have possibly imagined. That bold bet started to pay off, and this is where the story just goes into overdrive. Okay, so let's start with the baseline. Remember this number, $425 million. That was the total amount they initially put on the table. Then, Bitcoin's price just took off. And that investment didn't just grow, it exploded. In a ridiculously short amount of time, it more than doubled, crossing the $1 billion mark. But it didn't stop there, not even close. The value kept climbing until, at its absolute peak, MicroStrategy's Bitcoin holdings were worth a mind-blowing $7.5 billion from a $425 million bet. It's just an unbelievable return on investment. And this wasn't just some theoretical number on a balance sheet. It had a direct, massive impact on the people who owned the company. The stock, which was just kind of sitting around at $120 a share, completely skyrocketed. It peaked at over $850 a share. The shareholders who stuck around were rewarded in a huge way. So what do you do when you're on a hot streak like that? You double down. And the logic was actually pretty simple, as you can see here. Why not borrow money at a super, super low interest rate? We're talking less than 1.5%, to buy more of an asset that you believe is growing way, way faster. From their perspective, it was a no-brainer, and that's exactly what they did. And this all leads us to the real endgame, the grand strategy. See, this was never just about protecting some cash. This was about completely changing what MicroStrategy was as a company. I mean, just look at this chart. It tells the whole story. That little blue sliver, that was the growth from their normal software business. Steady, but kind of boring. That massive purple section, that's the growth that was powered by their Bitcoin strategy, pushing their growth rate to over 170% a year. It's a total transformation. So here's the bottom line, the big idea. MicroStrategy basically turned itself into a publicly traded way to own Bitcoin. It gave all sorts of investors who maybe couldn't buy Bitcoin directly or just preferred the stock market a really simple way to get in on the action just by buying a regular old stock. Which, of course, leaves us with one last massive question. MicroStrategy took its biggest liability, its cash, and turned it into its most powerful asset. They completely rewrote the rules for what a public company can be. So, is this just a one-off story about a brilliant maverick CEO, or are we looking at the very first chapter of a whole new playbook for how companies manage their money in the future?